So I'm back, and I just wanted to talk about some things. This is the national producer number, and I'm going to go into the website on the next slide. But as we move on, um, I'm going to show you where you can go, and this is it: nipr.com.licensing center. Look up a national producer number. Okay, so excuse the scratches on this license, but I didn't want anybody to know my business address. There's my license number. We are located in Florida, and that's a Florida license number, which is why you go to here, and it says FL Florida, and this is DFS, means Department of Family Services. So if you had a problem with someone who wrote an insurance policy for you, or someone who wasn't doing something right, you could go ahead and make a complaint there too. If somebody didn't explain to you what I'm about to, that's where you go. I need 24 hours to certify. I'm compliant. My certification was due 2026, but I've done it already, and that's what that says. And these are just a few. The list goes down of some of the insurance companies with which I'm allowed to write licenses for. And you can look this up on anybody, not just me, but on other people: 2020, 2025, 2021, 2022. Some of these do foreign. Um, they do foreign nationals, and if somehow you proved that you lived in the United States, and particularly in Florida, and you proved that you lived here and you wanted to get a license, you can get a license yourself, or you can also get an insurance policy, and you can do your own licensing. We do have foreign nationals and foreign policies that are available for people who want them. And so I just wanted to reiterate foreign there. But let me go on to the next slide, and let me show you what happens here. When we apply for a license, we'll put something on, and some of our policies, maximum that someone can get is 500,000, and people say, well, why would you put a maximum on me? Well, we're putting a maximum on you because if you're retired, and you're retired like most people, your income is not going to be too much, above $10,000 a month. Not even some people is going to be 5,000 a month, and so we want to make sure you don't get rid of your retirement, and we're not charging you too much in retirement to get a policy. Single graduate students, because they assume you're going to be looking for a job, and we know how the job market here is in the United States. Even if you're working for Uber, you're working on commission for a company, and they do, some of the policies do. These are not all policies. Okay, this is just some. And single undergraduate students without a job, with a job because you're still an undergrad, okay, is this. Now, you may ask me, why are you putting these limits on people? Well, we're trying not to put you in a hole. Okay, not all insurance companies. And I know people hate to talk about insurance, especially this, because a long time, and I thought this myself, you saw someone in a suit saying, I sell insurance. People thought they were running after you like Dr. Death, but that's not what these are. These are policies so that you can turn around and use them at this and that. And I'll give you an example. For instance, I had some business matters that I had to attend to, so I took out some of my policy, my policy to pay some of the business expenses I needed, and then I have to pay it back within a year or so, and I get a 2.5% interest rate, which you can almost get almost nowhere else. So that's why we look at, what you can do with these policies, because, for instance, you will not get cash value. They're on there. You won't get a cash value of $250. It'll take you the term of that policy to get the cash value. And most policies take about a year or two to get a cash value. So just imagine you're 21, you want to use it to pay off when you graduate at 23. This may be important to you. Okay? And I want to say it has a cash value, but not instantly. This is not a death policy. It's not, one of these $250,000 policies, and all it is just to bury you. There are things you can do called living benefits that you can use with now. And I'm going to go on ahead and introduce you guys to some of the people I'm supposed to listen to at 5 o'clock today. So I have several agent portals that I can log into, and when I logged in here and I put this person's about 23 years old there, and I put in a smoker because a lot of people tend to think that if you're a smoker you can't get approved, and this doesn't guarantee it, but it says most likely. And I've had some preferred, you call it preferred, smokers. There are different levels of people who use carcinogens or who smoke, because there's also different things you can smoke. Like some states it's legal to smoke some substances, in some states it isn't. So, but what they do is they have different premiums for this. Now, this minimum means nothing because that's not what the carrier wants. The carrier is going to want a minimum of $63. And if you can go over it, you can always pay over this maximum, which is $122. You can pay over that, and the policy is for $50,000. What are you going to do with that policy? You're going to wait until some cash value accumulates, and you're going to see if you can take this policy. And since if you can pay that within 10 years, you'd be 23. So when you start, so you're 33 years old by the time you own it. And you say, hey, call the company, say, I'd like this policy. I'd like a new policy, and I'd like to take it to 250,000. And then you pay the premiums of this. This is added into, it is called a rollover of a like kind, because you're going to try to get another insurance policy, and you're going to get a rollover, not to an IRA, but to a similar product. So it'd have to be like an insurance policy. Okay. And you roll that over to, they call a like kind exchange. Some people have said that they've used them as down payments on real estate investments, but I guess they took the cash value out. Because you can't have the insurance company isn't going to usually go to directly to another investor and say, okay, here it is, I'll pay them. Or maybe somehow they use it for collateral. Some I guess do, but I have not found any that have. So I can't say that, but that's what you do, and that's how we quote, and this is what we get. And so when we tell you something, it's not like we're doing something, silly or janky and janking up the price. We do this, and again, this is for the state of Florida. So please don't call a Minnesota agent and say, hey, this girl said that I could do this and that. These are very specific. This is the birth date. And this person was actually hypothetical. So, there's no one in here, but this is what we get. We get a quote, and we have to go on this, because if we do something else to use to that quote, if you remember this number that's under here, either of these, you can go to us and report us. And most people don't want to risk their livelihood or their second job income to do something silly, and you'd want to keep a client because this is pretty low. So that's pretty much what we do. And on the next slide, we're going to introduce you to some people who are going to be talking about this later on tonight. Thank you. These people are going to kind of explain it to you, and this is on Zoom. If you can get on, you can dial the phone by Zoom. These are all the things you need. And that is today. And there are 3 different times, 4 p.m. There's 9 p.m. Eastern. This is Pacific time. This is Mountain Time, 8 p.m. Central Time, and 9 p.m. tonight. So this and that to talk to you about what really companies do and why there is a need for looking at not only insurance but other retirement options. Thanks.